This is the Retirement Solution Podcast with financial advisor Jon Hicks, founder of J. Hagan Capital.
There is tax preparation and there is tax planning. And we're going to talk about the difference and why we want to make sure that you have a tax plan for retirement. I'm Heather Branch. This is Jon Hicks, founder of J. Hagan Capital, financial advisor, and man against unnecessary taxes. Can we add that to your
that is the truth
list of titles and certifications? It's a mission you were on, sir.
When you look at how many times the average dollar that comes to us, how many times it has been taxed and how many times it will be taxed, you start to wonder, how do we get to keep anything when you're thinking about that? Yep. How much of a federal tax is on every gasoline gallon we pump and every milliwatt or kilowatt or gigawatt or whatever those things are that you put in your electric car? It's like, well, John, I've got an electric car. Do you understand how that FCC or FAA or what? There's so many fees that go on all that stuff. It's kind of mind-numbing.
Yeah.
How many times the government touches our money.
Other things that are mind-numbing are all the things that we are required to keep track of when it comes to just wanting to be responsible citizens on a bare necessities level. Okay, case in point, true. I don't know if you're familiar with the stand-up comedian Greg Warren. My husband Kyle and I, we just discovered him. He's great. This is a little snippet about the documents we have to keep track of.
I'm a constant disappointment to the DMV. Sir, do you have your social security card? I haven't seen that in 30 years. Sir, it's an important document. Well, then you guys shouldn't have printed it on a gum wrapper. Okay, at least the passport people made a book out of their thing. It's got pages and a cover, and yes, I lost that one too, but I shouldn't have. Sir, do you have your birth certificate? My birth certificate? That document is 54 years old. I also don't have the Declaration of Independence.
My husband is guilty of having lost his birth certificate, and I'm so OCD organized, and I judge him. But there are a lot of things that it's like, how are we living in 2025 and papers like social security cards and birth certificates, how are they not in a more digitized, formalized world that we live in?
It's the truth.
And that's just the beginning of the things we need to keep track of, because we're getting ready for tax prep season, John, and all the documents we got to bring to that space. Let's talk about the work that you guys do, because you're not a CPA, you're not an accountant. You have CPAs.
Correct.
Do you have CPAs on staff at J. Hagan Capital?
Absolutely. Okay. So we have CPAs and tax attorneys both on staff.
Okay, got it.
But mainly because they have very different roles.
Okay.
Now, the craziest thing is we do not do a single tax return for our clients. That is just recording last year's information,
right.
Recording history. We are actually vigilantly planning for the taxation going forward, whether it's the very tail end of this year, what things can we do before year end to hold on to more money and or to deploy it correctly? What are we going to do next year in January, February, March so that we pay fewer taxes even in April?
Right.
But for most of us, especially when we're talking about retirement in general, what are the ways that we can do to position ourselves to pay the least amount of total taxation when we start to live off of our savings, right? And those are big things to the tune of tens of thousands for almost anyone, to hundreds of thousands, if not millions of dollars in future tax savings. That's from planning. That is not from preparation.
Right.
That is actually from planning correctly.
And that's the difference of what you do. Again, you're not a CPA. You don't do tax returns for your clients. That's the difference of what you do at J. Hagan Capital versus what happens every year at the April 15th deadline. Planning versus preparation. And what we want to be doing for our retirement is we want to be planning. So Let's dive into the benefits that somebody should be getting out of the proper tax plan for retirement.
Yeah. So, I mean, if you think about it, there are so many ways that we can actually plan correctly to avoid, correct, or utilize certain things so that we don't pay extra taxes, whether it's today or in the future, right? So if we just think about our investment portfolios in and of themselves, the question is, where are our assets located? Okay. Are they in a taxable account, like our regular brokerage account or CDs at the bank? Or are they in a tax deferred account, which means that we have an IOU to the government, right? That means that we're deferring taxes now only to have a future bill that we have to pay. Or are they in Roth type accounts or tax-free accounts? Those are dollars that we put the money in. We did not get a tax break, but everything it does in that account going forward is potentially tax-free forever, or for at least for as long as our lives. So the main thing we can understand is what assets do we have in each one of those style of buckets? And is it the right one, right?
Okay.
So in the taxable accounts, that's where you can do tax loss harvesting, right? You can even do tax gain harvesting. People don't realize that the lowest capital gains rate is actually 0. And you can have household income of over $88,000 and still potentially be in the 0% capital gains rate. People are unaware of that.
Yeah.
And yet we apply that every single day to folks that have they have positions that they've had for a long time. They own John Deere stock or Caterpillar or AT&T or UPS or whatever it is. We can show them ways where we can use tax gain harvesting where they can sell that position. They can even buy that company right back if they wanted to. But the point is they sell that position and they lock in a 0 capital gain rate on those transactions. So basically, when you're looking at portfolio taxation strategies, they're pretty simple, right? Those are the things that any of us can do. We once met with a gentleman, and it was we made certain that he knew we liked all of his assets. We just didn't like the buckets that they were in.
Okay.
By reconfiguring the exact same assets, Heather, but putting different amounts in the taxable versus the tax deferred and the tax free.
Yeah.
We showed him that we expected to save over $930,000 going forward simply by doing just rearranging the same assets. And these are things that his CPA just doesn't do.
Right.
It's not that he didn't have a guy. He had a guy, but that guy was worried about last year's 1040 or whatever it was.
Right.
He was just making sure they had the right tax forms. He wasn't paying attention to this stuff, and it wasn't that guy's job. But that's what we do. So on the portfolio side, there's all kinds of things we can do. And if you're very wealthy and you have really good established long-term legacy positions, there are all kinds of things that are currently available because of the OBA, the One Big Beautiful Bill Act, that allows us to potentially mitigate other taxes. So those are some of the big things in the front end when you're just talking about a portfolio.
Okay.
When it comes down to charitable giving, those are other things. So if we've done a great job saving and we feel that there's going to be a lot of money left over. Now, some of it we want to make sure that we're giving to our families and charities or families and so forth. But other things we might want to earmark for charities. We can use donor advised funds, charitable remainder trusts, slats, grats, bats and cats as well. I'm being facetious on those last two, but almost all of these the lexicon of things that we can do, there sometimes can be very, very favorable for getting tax breaks now and then allowing the money to grow and then being able to give a very large gift to charity. So those are things that we can do to knock off current tax rates, but we can still have long-term effects that are great for our families.
Okay.
So when you look at those types of things when it comes to charity, that's also big.
Okay. Got
the
it.
estate planning piece of the puzzle is of primary importance to me, right? Because when we're typically in our office, we're dealing with people that have saved very well. We're talking millions of dollars, multi-millions of dollars, 10s and 20, lots of money. And the whole thing is we would expect, unless something horribly goes wrong, we would expect not only them to be taken care of in their retirement, but their kids are probably going to be taken care of. Even their grandkids are going to be pretty good. The question is, can we make sure that we protect it from government, overreach? Can we make sure we're protecting it for the long run from divorces in the family, from healthcare issues, from all those things? And that's where we really want to make sure that we have our trust established correctly, right? So these are typically estate planning ideas, whether we're using lifetime giving trusts, right? Or whether we're using dynasty trusts, whether using deferred sales trust, whether we're actually implementing this for spousal continuation trusts, right? Where one spouse passes away, we want to be certain that trust accommodates the income needs for that surviving spouse the entire time. And at their passing, then the assets get shuffled around. That is also of primary importance if you've ever had, if you have a joint family. If you were previously married and have children on one side, trust designs are the best ways to make sure that your wishes are taken care of correctly, right? I can't tell you how many times people come in and they came from, it was a second or a third marriage. And there are kids out there that feel like, unfortunately, that wasn't what their dad had wanted. They wanted something different. Unfortunately, without trust documents or without the proper things in place, unfortunately, we don't know that, right? So in our firm, we want to make sure that we've thought through that. And we also want to review things too. A lot of times people say, well, this is what I want to do. And that was exactly right at that time and date that they did that.
Right.
But 5 or 6 years down the road, things change, or there's different circumstances, or new grandkids come into the fold, or there's a death or a birth. And we want to make sure that we've reviewed those documents so that everyone is accommodated, right?
Okay.
So those are important too. So all of these things, believe it or not, even though it sounds like estate planning and it sounds like all these things, it all relates to taxes.
Okay.
It's how we're going to be taxed now, in the future, or the next generation. Right? Because the one thing that I have said consistently over and over and over again is the fact that our government cannot maintain itself at the current tax rates. We cannot. We will go under.
Right.
Now, that is not a joke. That is not doom and gloom. That is just simple math. And when it comes down to it, two things will have to happen. We can either grow ourselves out of this problem and reduce a tremendous amount of the money we're spending. Now, what would we spend the most on? Social Security, Medicare, Medicaid, and interest on the national debt. No one really wants to reduce those.
Right.
So that's number one.
Okay.
The only other thing we can do, Heather, is raise tax rates.
Yep.
Raise tax rates is the only other way to do it. And if you go back to when we were much more solvent in the 1960s, the lowest tax rate was 36%. That was the lowest. The highest was 90%. Now, if we went back to that tax rate, would we fix a lot of our problems? Yes. But would that completely destroy a lot of our ideas of the money that we've earned and we would like to live on and give to our family? Would it destroy that concept? Yes. So a lot of the things and why we're talking about trust planning when we're dealing with taxes is for that exact reason. We want to safeguard the money correctly so that we have access to it. But at the same time, when something happens to us, we want to make sure that the government gets the least legal amount based on what we can orchestrate, right?
Okay.
And laws will change, and we want to ebb and flow with that. But it's so important to the point to where our incomes, our assets are all fundamentally based around how are we going to be taxed on that, right?
Right.
The current environment allows us to do a lot of different things, but we have to seek it out, right? So when this gentleman said, hey, I don't have all this stuff, I don't have it in gear, when it comes down to you thinking about taxes, ask yourself, are you being proactive, paying the least amount today, the least amount over time, or the least amount cumulatively? If you don't have an answer to one of those questions, you probably don't have the right plan.
Well, Jon and his team, they're here to help you get answers to these questions and put it all into a plan that works for you and the years ahead. RetirementSolutionShow.com is our website and where to go to begin the conversation with Jon and his team at J. Hagan Capital. If you take nothing else away from this conversation except for this one understanding, when it comes to your taxes, you do not have to just take what Uncle Sam's gives you. You can utilize strategies to work to reduce your future taxes and what you might have to owe. At J. Hagan Capital, they are here to help you understand what strategies might work for you and your plan. Let's get to work on that. Visit us at RetirementSolutionShow.com, or again, click on the links we got posted in the show notes.
Thanks for listening to the Retirement Solution Podcast with Jon Hicks. Begin the conversation about your savings plan with Jon and the team at J. Hagan Capital by visiting RetirementSolutionRadio.com. Be sure to listen to Jon's radio show, The Retirement Solution, Saturdays at 8 a.m. and Sundays at 9 a.m. on News Radio 840 WHAS.
J. Hagan Capital Incorporated is not licensed in all 50 states. To find out if J. Hagan Capital Incorporated is licensed in your state, please call 502-690-5635. J. Hagan Capital Incorporated is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. By contacting us, you may be provided with information about insurance and annuity products offered through J. Hagan Capital, LLC, NPN number 1882794.